Optimism remains abundant as the year gets underway, driven by growing excitement around Bitcoin and the broader crypto complex amid continued signs of institutional adoption and regulatory progress. But the market has now encountered its first meaningful test of 2026. Technical factors have emerged as the primary near term constraint. Specifically, the market's focus has been squarely on Bitcoin's ability to decisively clear the December highs. While price briefly probed above that area, we had defined a sustained break as requiring a move through 95,000, a level the market ultimately failed to reclaim. As momentum stalled just below that threshold, confidence in a clean breakout faded, and price action has since reverted to a choppier consolidation following that impressive run to start the year. An additional source of latent risk stems from U.S. equities. With equity markets trading at or near record highs, the prospect of a correction cannot be ignored. Crypto has historically shown sensitivity to broader risk off dynamics, and a reversal in equities would likely create near term pressure, particularly given how extended risk assets appear. That said, from a broader strategic perspective, we see an important silver lining. As the crypto asset class matures, the long anticipated opportunity for it to stand on its own and ultimately outperform during periods of equity market weakness becomes increasingly plausible. Bitcoin was born out of a rejection of the traditional financial system, yet it has thus far largely benefited from the same post crisis risk on environment that lifted equities. Structurally, however, Bitcoin is not a risk asset, and with the emerging market style phase now behind it, the groundwork is being laid for Bitcoin to assert itself as a store of value when stocks struggle. We believe this dynamic extends beyond Bitcoin to Ethereum and other networks building critical financial and technological infrastructure through decentralized finance. These ecosystems represent alternative rails that over time should be capable of delivering relative outperformance even in less favorable equity environments. Importantly, this creates a compelling asymmetric setup. If equities continue to grind higher, the upside case for Bitcoin and broader crypto is already well understood. If equities weaken, we would expect some initial spillover pressure into crypto, but we also see a growing probability that Bitcoin ultimately decouples and fulfills its role as a non correlated alternative asset. In the near term, should risk sentiment reaccelerate and the constructive tone seen early in the year return, attention will quickly shift back to those key technical levels, namely 95,000 in Bitcoin and 3,500 in ETH. A sustained break above these thresholds would materially improve the outlook and open the door to a far more dynamic phase for the market. That's all for now.